you have a lot of crypto companies saying that they're looking overseas, that they're looking to get out of the U.S. What's Marathon's view? Are you looking at offshore opportunities here?
Well, we recently announced a new project in the UAE where we're building one of the largest digital asset operations for mining in Abu Dhabi. We're also looking in other places. Our goal longer term is to be about 50% offshore, 50% onshore. Bitcoin is treated a little bit differently than broader crypto. The SEC and the CFTC have both given clarity that Bitcoin is a commodity, it's not a security. So Bitcoin is being treated a little bit differently, and I think the situation around Bitcoin is different. That being said, clearly, all the way up to the top at the White House, the economic report that they issued in January had a very different tone than the one they issued prior year. So clearly this is coming from the top that, crypto is bad in their views. But we're very hopeful that the legislation that is going through Congress now will hopefully add some market structure guidelines and alleviate some of the lack of clarity that exists today so that the regulators can operate in a more friendly way towards the industry that'll allow people to innovate and build businesses in the U.S. as opposed to just moving offshore.
Is there any hope, Fred, in kind of fighting this crackdown from the SEC and the Court of Public Opinion? I mean, you mentioned legislation. Obviously, that's, I guess, the main mechanism through which you would change the SEC's mandate, because so many of these coins, you can argue that they're a commodity and not a security.
Yeah, so I think part of the challenge is that with no clear legal rules, legislation around this, the SEC's mandate is seemingly a little broader than it should be. There have been some mentions of overreach. I think there is a Republican member of the House that has put forth a bill that essentially would restructure the SEC. So I think momentum is building towards people really starting to pay attention to this. At the end of the day, Congress needs to provide very clear legislation, and then I think the SEC and the CFTC have to come to terms regarding how this is all going to be regulated. But a lot of this is definitely potentially a bit of strong arming. You think about what the SEC is doing by essentially scaring people enough, they will achieve the end that they're looking for, which is to move all this offshore. You look at all these altcoins that have been delisted by exchanges. You look at Robinhood delisting altcoins and stopping trading in crypto. Essentially the SEC is achieving its end without having to take all these people to court. So it's a matter of who gets to the finish line first and what happens come next year. We have 3 presidential candidates who have come out on the Republican side that are pro-Bitcoin. And I think momentum, again, is building for at least a more positive environment for Bitcoin in the U.S. But we'll have to see what Congress can do to really rein things in and get everybody aligned around how things should operate so people can get back to business.
You mentioned Robinhood. We've also seen eToro stop new purchases of the tainted 19 coins, so to speak. Are you also avoiding any tokens that the SEC has deemed securities?
Well, we're a pure Bitcoin company, so in our case, we focus on Bitcoin. It's been declared a commodity by both the SEC and the CFTC, so we're continuing just business as usual.
And Fred, I'd love to get your thoughts on the mining industry. Take a step back and talk about the state of Bitcoin mining, because obviously Bitcoin's had a great 2023, up well over 50%, but still down dramatically from its peaks. What has that meant for your margins? What does your current break-even rate look like, and how does that compare to the rest of the industry?
So the industry has been going through a big upgrade cycle. There's some recent reports that have been issued that show that energy consumption is maintaining at the same level, but at the same time, the global hash rate, or the amount of compute power that's applied to Bitcoin mining, has increased substantially. We've grown substantially. We've doubled our capacity year to date over the end of last year, and we'll continue to grow it more throughout this year. And we're using the most modern, most energy efficient machines. What we're seeing is miners that had older machines have been upgrading those to more energy efficient machines, which is making the overall industry more energy efficient. So I think people are continuing to grow. Margins are essentially staying flat to a little bit lower because as global hash rate grows, the difficulty increases. But Bitcoin prices obviously moved in the right direction this year. So I think what we're going to see is a slow uptick in the price of Bitcoin over the balance of this year, leading into the halving next year. At that point, there's a big impact to margins because companies' cost to mine will essentially double.
Right.
And so it'll be very interesting to see. Miners are very focused now on becoming more energy efficient. We have one of the most energy efficient fleets in the industry, operating at somewhere around 24 joules per terahash or watts per terahash, where the average industry, or the industry average rather, is in the 40s. So I think it's going to be a bit of a period of people continuing to upgrade, and then there'll be some sort of cleansing post the halving next year.
I'm glad you brought up the halving, because if we take a look forward at that, hypothetically, when we do get to that point, what would you expect the mining industry to look like? Will there be fewer miners after we get through the halving?
I think what's going to happen is the larger miners that have most modern fleets, the best energy costs, and are the most efficient are going to thrive, while the smaller miners that either can't raise capital, can't upgrade their machines, and can't get out of potentially more expensive energy contracts are either going to have to consolidate or essentially go away. As well, you're seeing more miners moving offshore. There's some great stranded energy opportunities in Latin America, Asia, in Africa that are coming to market at very low energy prices. And I think you're going to see this industry continue to chase the lowest cost of energy. You'll also see miners focus more on starting to own energy generation, because instead of being parasitic load on the grid, you're going to see miners move behind the meter. This is what we do. We sit behind the meter at wind farms typically. So we get to use that stranded energy and not take it off the grid. But at the same time, you're going to see miners start owning and investing in energy projects to develop their own energy, whether that's methane flare, whether that's landfill methane, whether that's solar, wind, et cetera. And I think the miners, together with the renewable energy companies, are going to be the largest really investors in renewable energy projects in the US, because we have a very big problem in the US. There's a lack of transmission capacity to ship the energy from the renewable energy farms to the consumer. And the only way you can get these projects financed is there has to be a customer for the energy, and Bitcoin miners make the ideal customer for that. So I think you're going to continue to see a lot of progress there.